Hello and welcome to FX Street Currency in Play. I am Matt Brown. I'm joined down the line on our weekly slot by Ed Matz of Matrix Trades. How are you today, Ed?
I'm very good, Matt. Yourself?
Yeah, very well, thank you. Well, the market's been quite active, certainly in the FX space, the past couple of days. Risk off, risk on, wherever we are. But let's have a quick look at the trends for today, picking up on those themes. Well, we're looking at euro dollar off highs, range bound near the 119.50. Ahead of the US ADP later on today. We've got cable losing momentum near 129.80, now trading near the 129 handle, and dollar yen around 110 on US Treasury rebound. Any quick takeaways there, Ed?
Yeah, the market's going very, very fast nowhere. Essentially, obviously, it's in reaction to North Korea. Typical response, everyone, the world's going to end. Dollar dump, stocks dump, risk aversion, and then it unwinds. It has happened time and time again. And what I wanted to highlight is we've got a situation of cry wolf, not only from out of North Korea, but also the US administration and Donald Trump. And it can't persist too long. I mean, I'll show you a chart in a minute of the North Korea.
You've also brought a cartoon as well explaining this as well, crying wolf. So just talk us through this cartoon.
Well, it says it all, basically. Yet another missile fired, and it's dive bombed, the dollar dive bombed, indices dive bombed across the board. It was risk aversion, but as the guy says to the leaders, he said, Kim, he basically says, I'm afraid it's blown out. It was a shock. Euro dollar got up to 110.65. DAX drilled down, dollar yen pushed below the previous low, but not the key 108.10 support, and now it's a couple big figures higher. And someone is crying, well, they're both crying wolf. They're getting in a situation where the North Koreans are pushing the ante. They're saying, well, stop us then. How are you going to stop us? And, the US administration is faced with a choice. They can either react violently, which obviously no one wants, and certainly not, China's going to and Russia are going to step in the side there, or they put a military presence there, and so Kim is going to put increasing number of missiles over as he's building up the Pacific operation, because he's basically going to say, it's like a child. I'm going to push boundaries until you react. And what is the reaction? Well, the UN says no, more sanctions. That's not going to cut it unless those sanctions really come out of China. Or what are they going to do? Well, they're going to, they can build up their defenses. They could put in greater sanctions. But at the end of the day, none of it's going to cut it. So the ante is going to be increased to a point it breaks. Now, that's very worrying from the world perspective, but from the market perspective, we're getting to a point where we react adversely to each North Korean missile, and then it goes back up. So there's going to come a point when we actually think, well, we've seen this before, yeah? I mean, it just back up. So
as you say, cry wolf. And you've also brought I think the next chart where we look at actually what the North Korean won does on the back of this.
Well, this is a long-term chart, but it's interesting because the North Korean won, a lot of charts, which some people wouldn't look at that closely, don't trade like normal currencies. It trades like a derivative. If you told me this was a VIX chart, I could believe it because of the way it trades. It goes to tight ranges and spikes viciously. And now, typically for North Korea, that's typically on crisis or on event risk, and it's the same pattern into each one. And essentially, what it's saying is this period of consolidation in the North Korean won did it before, and it blew up into a crisis. So the point simply is that everyone is playing cry wolf, but there will come a time when the wolf will actually appear, and that's the green spike. So we're heading towards some sort of crisis at some point. Now that can go on for months, could conceivably go on for years. But essentially, so this chart's a reflection of the international reality that this situation, this stalemate, this series of cry wolves cannot be sustained for too long, and it will be a trigger for something down the line, and possibly sooner than we expect.
Okay, so we'll look out for that, certainly. And moving on, looking at dollar, Swiss, and cable as well, leading cable. Can you just quickly walk us through this and what the trade is here?
One of the points to make increasingly is that markets move in sequence. We're lucky, we're blessed in foreign exchange in all trading markets that not all markets go at the same time. They feel like they're moving at the same time. but often for flow reasons or interest rate differential reasons, they're staggered. And what we're seeing here is actually dollar Swiss, this is an inverted map of dollar Swiss on top, is leading cable. In other words, the price action we have seen in cable on the last 24, 40 hours, we've seen 290 hours previously in dollar Swiss, which is basically why we sold 75 yesterday, looking for a retest of the lows, and now you know where dollar Swiss is it comes all the way back up. So it's a great trading plan because it's actually respecting levels clearly, but cable is actually following dollar Swiss. So it's saying back down to the lows, buy it again because it's going to ramp again.
And that's on the inverted chart, so look out for that, viewers. Moving on, we're looking at non-farm payrolls, obviously on Friday. Keep an eye on that. But leading into non-farm payrolls, you've noted a few things here with dollar yen, S&P and the euro dollar. What should traders be looking at here ahead of non-farm?
Well, one thing we do at Matrix Trade is we look at what drives the market. And as you go into events, known events, not North Korean bomb events, because obviously you can't always anticipate those, markets tend to trade in a very similar pattern. Now, what is perverse in many ways, because that's sentiment driven, is sometimes they give you a hint as to what the result may be, whether it's as expected, it beats expectations or misses it, which is kind of perverse, weird, but it seems to work. And so we look at how the market typically trades into NFP and also out of it, depending on the result. And you can see that dollar yen is following the same typical pattern as the average, but it's also following the same pattern, particularly as the beat for Friday. Now, what that's saying is dollar yen is back to risk on at the moment. It should dip. And this is supported also by the US Labor Day. Typically what markets do, what dollar yen does into Labor Day next Monday, well, it should dip now in the next 24, 48 hours before it rallies again, which is consistent with the same price action for NFP for dollar yen. It spikes up and then starts coming off again.
And the S&P and euro dollar as well, do they follow suit?
The story, it's basically saying it's it's curious because it's obviously what's happened in the last 24, 48 hours has been North Korean led, but in fact it's actually consistent also with what happens into NFP. We have a period of, if you like, risk off, in other words, risk appetite, where the dollar goes, obviously first of all risk aversion, then the dollar goes bid on basically risk appetite. And then on NFP should go bid again, essentially. We should see the stocks fly up. We should see dollar yen go up again, and the same with the euro coming back off before it gets back into its range.
And you've also mentioned, obviously, Labor Day coming up at the start of next week. Is there a similar trend that we're seeing there on the next chart?
Well, there is certainly in dollar yen and in the S&P. Curiously, there isn't so much on the euro dollar. Well, there is, but it's not to the same extent. You don't see the same sort of volatility. In other words, what it's saying is well, again, the dollar goes strong, euro comes off, and then does that a second time at or on NFP itself and into Labor Day, which is actually what it's saying is the market's building to a real, I mentioned a major inflection point to our followers all on Twitter yesterday. How North Korea, yesterday's New York Stock Exchange Open gave us an inflection point and we saw it back to risk appetite, stock flew. The same thing coming on for immediately after Labor Day. There's a real point, a volatility point, where the markets, we're expecting the markets to stay strong. In other words, dollar strong, stock strong into the weekend, through the holiday. But watch out Tuesday. That's what it's saying. Something's brewing for Tuesday. No idea what, but it's brewing.
Good stuff. And let's have a look at your final chart here. We're looking at, this is, I assume, the euro dollar. Where do we go from here? We've seen some euro strength, obviously now some dollar strength coming in. What's the trade?
Yeah, well, if you remember the cartoon, the guy was saying, I'm afraid it's blown out, referring to the missile. Well, it's exactly the same thing with the dollar, and in particular, euro dollar that ramped up to 120.65, and now it's rolling back into the range because North Korea risk aversion is off. And again, the point we've made before about that sentiment gap with the interest rate differential, it should come back into the range. But first, one step at a time. It's retracing to the previous 119.10 high. It's the obvious one. There are people short below that level. It's a key support. People are going to buy it and support it. So we're expecting 119.10, 120.65 for the next 24, 48 hours. So it'll go back to the highs, which will be a selling opportunity for the risk appetite referred to on for a break back down.
Understood. Good stuff. And looking ahead at the economic calendar, a couple of things jumping out at me are the ADP employment change, precursor maybe for non-farm on Friday, and GDP out of the US. Anything that you're particularly looking at, or would they be the two highlights for you today?
Well, ADP is a funny one because we always get overexcited by ADP, but it's notoriously bad as an indicator for the real number on Friday for non-farm payrolls. One thing we do is we run a series of studies looking at how ADP impacts NFP and what the market should do, because ADP will flavor people's expectations and market sentiment. So that will have a knock-on effect for positions into NFP that will again spin off how people react after NFP. And as I said, ADP is notoriously bad. So ADP is a figure that can be ignored, except to the extent people take positions on the back of it. And that's where our averages, the non-farm payrolls, and the lead-in from ADP into non-farm payrolls is quite important. So we're looking for a beat at the moment on NFP, given the price action is following that. But more importantly, for us from the NFP fractal point of view and how you trade NFPs, one thing we always try and do is trade gold, because whatever the result, it tends to do the same thing, it tends to dump and then rally. But we'll be looking at how the market reacts, or rather the result, because the markets will consistently act in a similar way depending on the result. And it's not always as you would expect. It depends partly on the context. Obviously, non-farm payrolls, if they're good, that's inflation, you expect the dollar to go up. But if people are positioned that way already, it sometimes will trade the opposite way. And that's the beauty of the fractals. The averages incorporate sentiment and positions as well as the actual result.
Fantastic. Well, on that note, Ed Matt of Matrix Trade, thank you so much for joining us down the line today.
Pleasure, Matt. Cheers. Good luck, everyone.